Price action is one of the most common strategies that most people use, right? Price action, there's ICT, there's OW, supply and demand, there's BTMM, right? And then there's other strategies like the ones that I post on my YouTube channel, right? So generally today I'm just going to be talking about price action, so that the beginners, if you're a beginner, you just get to know the general idea of what price action is, right? What you'll be looking at and everything else, right? So what is price action? So from my point of view, from my own understanding, right? So price action is what generally looking at the chart, right? So price action, there are some people who I don't, but there are some people who do what is called naked chart trading, right? So on naked chart trading, you don't draw a trend line, you don't draw a support resistance, you don't put any indicator, right? Just look at the candlesticks just as they are, right? Just look at the candlesticks and their behavior, right? So generally on what you'll be looking at is the weak rejections, right? So what do I mean by weak rejections, right? So let me go to that. More in fact, you won't be if you're looking at your candlesticks only, you won't be looking at your candlesticks on the lower time frames, right? So you generally starting from the 15 minutes time frame going upwards is better, right? But the 1 hour is what the higher time frame the better, right? So I'm just going to be showing you what on the 15-minute time frame so that you get better understanding, because there will be more examples using what the 15-minute time frame, right? So using the 15-minute time frame, right? So let's take for example, right? So let me just delete each and all this, right? So let me delete all this, right? All these markings, what? Because when you are doing what negative trading, you don't there's no indicator at all, right? So you'll be looking at the chart just so like something like this, right? There's no indicator, there's no nothing, right? Then let's take for example, you just be looking at the candlesticks, how they are forming their patterns, right? So generally if you are looking at the charts, right? So what do I mean by weak rejections, right? You'll be looking at what weak rejections. So let's take for example over here, right? This over here, let me use my pencil, right? So this over here, right? This is what we call weak rejections, right? So right over here, as you can see, the market, they've got this candle, they've got no wicks at all, right? Then this candle, the wick is at the bottom, so it's just showing that what is a strong uptrend, right? Let me use two, right? But right over here, right, these weak rejections start getting out frequent, weak. So what do I mean by a week? Just a week is when I've got what? A candlestick, right? So I've got this, it's just this small one, this straight one, or tick over here, right? So that's what we call a week, right? So as you can see, the weeks just keep on what? Getting more frequent, right? So if you start seeing weeks, it shows the sign of what? Reduction in what? In momentum, right? So the market is likely going to reverse at that what? Point or nearing point, right? So if you are closer to a resistance zone, you'll be able to understand to anticipate that the market will go down, right? Then there is what we call engulfing patterns, right? So engulfing patterns, let's take for example over here, right? We're in an uptrend, right? Then we've got what this red candle here on the middle, right? And it's showing a wick to the downside, right? But soon after that after that candle, right, we've got let me try to wrap this off so that you can see more clearly, right? So soon after that red candle, right, check the next candle, right? If you are a little bit familiar with the candlesticks, right? Check the next candle, right? That's what we call the engulfing candlestick, right? Why? Because it's totally engulfing the previous candle, the previous red candle, right? As you can see, the top is completely engulfed by this eye over here, and the bottom is starting from the bottom to the upward candle, right? So if you are looking at this, generally you could have entered for a buy over here, right? Why? Because this red candle was not has been engulfed completely, right? You've got sunlight here. This is almost an engulfing candle, but these candlesticks are almost equal, right? So those are the railroad tracks, right? They also show that the trend might continue, right? So that's generally what you'll be looking at, right? Right here, I've got weak rejections right here, right? We're showing that weak rejections at this specific level, and as you can see, we are almost closer to this one, to this supply zone over here, right? So the market will what? You anticipate that the market will go down, right? So after weak rejection, after what negative reading, right? There is what support and resistance, right? So support and resistance is generally when support and resistance, these are your horizontal levels, right? So horizontal levels, what do I mean? Right over here, let me take the pencil again, right? So over here, right? So whenever the market changes, right, you've got your supply or support or resistance, right? So here, when the market changes to the upside, this is the one, this is the support level, right? And when the support level gets broken down, broken over here, it's get broken, right? This now becomes your what? Your resistance zone, right? So if you combine this with your charts, with your candlestick patterns, you have stronger chart patterns, right? So right here we got what? A breaking what? A breaking this low, break this low, right? We got a retest, right? And we've got what? You continue downwards, right? And we've got a what? Your week over here, right? Let me just delete this, right? So right, right over here we've got right. So we got what? Let me put what? The horizontal line, right? So right here, this support when it gets broken down, right? It's now acts as what? As a resistance, right? So as you can see, when the market came back here, once it's rejected, second time it also rejected, though it passed a little bit, it continued to reject, though we are respecting what? This supply zone over here, right? But now we are considering what? Just this support and resistance, right? So when using support and resistance, personally I don't use what? I don't mark it as a specific point, right? I consider it as a zone, right? So that's why I usually use what? Supply and demand, right? So when the market reverses and goes up, that's a support zone, right? When the market rejects what? On the upside, that's a resistance zone. Why? Because when you are supporting something, you are lifting it up, right? So that's generally the concept, right? So with the support, when you are supporting something, you are lifting it up. That's why it goes all the way up here. And when you are resisting something, you are pushing it downwards, right? So that's this resistance zone over here. So that's over here. There's a resistance zone. Why? Because what? It's what? We're pushing down market, pushing the price downwards, right? This is right over here. This is a support zone. Why? Because it's pushing market upwards. We've got 1, 2, 3, right? Where it's pushing the market upwards, right? So that's just how you mark your support and resistance, right? Then there's diagonal the trend lines. So the trend lines are generally the diagonal support and resistance, right? So on the trend lines we've got something like this, right? So trend lines, they are going to be support and resistance. You can work with only 1 point, right? But when you're using trend lines, you need at least a minimum of 2 points, right? But 3 would be better, but a minimum of 2 points so that you'll be able to connect your eyes, right? So for example, over here, you connect this eye and this eye, right? That's your trend line, right? So when you're using a trend line, right, you anticipate that, for example, when the market pulls back over here, right, you could have entered for a sell. Why? Because it's sure, though it didn't work out eventually, right? But you were supposed to for your entries, you use either the trend line is respected or rejected, right? So right when the trend line pulls back over here, right, we anticipate that it will reject. Why? Because there's a strong weak over here, weak rejection over here, right? And then there's a morning star formation over here, right? So they've entered over here when the on this doji candle, right? Doesn't even go into profit that much, right? And it pulls back up, breaking the trend line. So if it breaks the trend line, we wait for a trend line breakout and retest, right? So your stop loss would have obviously been over here, above this one, above this previous high, right? This high over here, right? So your stop loss gets hit over somewhere over here, right? And you lost that trade. But if you let me check if there's there's a visible instant where the trend line gets respected, right? So over somewhere like over here, let's see if this works out. Right, so right over here, right? So you connect your trend line, this first point and this second point, right? And when the market pulls back to the trend line the third time, right, and shows this engulfing candlestick, you enter over here, right, and you went into profit. That's the candlestick one, the respecting of the trend line, right? That's how you enter, right? If it gets broken, you take a loss. But now the trend line, when the trend line gets broken, same as the support and resistance, it now acts as a support level, right? So that's generally what I understand using by price action, right? So price action, when you're looking at your candlestick, you are mainly focusing on your candlesticks, right? The candlestick formations, right? Then the chart patterns, right? You haven't talked much about chart patterns over in this video, right? So but there are flags, there are your wedges, right? So for example, this is the one you look at the one. So this is a flag, right? So over here, right? So when the market is one, so for example over here, you're drawing out your trend lines, right? But they are going out in a consolidation manner, right? So that's what we call flags, right? If the channel is consistent over here now, right? So this is the flag pole, the flag, right? And you anticipate another drop from that flag, right? So it's just a continuation pattern. The flag is a continuation pattern, right? So you've got a drop, a flag, another drop, right? Then there are wedges, right? Wedges, they are sort of like narrowing triangles, right? So let me check if there's there's a visible wedge somewhere over here, right? So something like this, right? Where the channel is not consistent, right? So this is almost a wedge, but this is almost a flag, but it's almost showing the flag nature that we want, right? The wedge nature that we want. Right? So a wedge is something like this one, like this pattern when the triangle is narrowing over there, right? So that's the wedge is almost similar to the ascending and the descending triangle. I just bunch them together, right, so that you'll be able to understand, right? So they are all continuation patterns, right? So when you're looking at price action, when you're looking at your candlesticks, your support and resistance, your trend lines, and your chart patterns, right? So that's just what you're looking at. You don't add any indicators or anything else, just your naked chart, and you're just drawing your trend lines, your support and resistance, and everything else, right? And I encourage you to trade to learn price action, right? And so I'm going to be posting a bit about price action in the next videos. If you like the content that I'm sharing, like, subscribe, and share the content. And if you want to learn more about price action or supply and demand or any strategy that you might want to learn, leave a comment in the comment section down below, and I'll be able to know how many are interested, so that I can be able to create the content, right? So that's it.